day. So first of all, we've kind of faded off the early morning strength on the markets. When you think about markets, like remember, this is why we always look at the indexes, right? When we do pre-market, like what is the first thing that we always look for, right? The first thing we always do every single day, we dig up the QQQs. You know, we were talking about this pre-market, the gap takes out a lot of the range, and then we're running into this kind of monster resistance. Every time the market looks good, it turns and reverses. That's what range is. So range trading means that when something looks good, it comes back down. And when something looks bad, it goes back up because you're just trading the bottom of the range to the top of the range. Momentum and breakout stuff works when you're like moving clean in a trend up or down, right? Otherwise, you're just stuck in a range. But the good thing is, even though we're stuck in the range and it's been a little bit more difficult, there are, been tons of earnings plays the last few days that are giving power to individual stocks. And I think that's really important. Is like when sometimes we make trading really complicated. And when you're trading like regular stocks that are like non-PR stocks, then they just move with the market, right? So like if you see this chart for the QQQs, what you see is, right, Roku, same chart. Why? Well, Roku had its earnings out like 2 weeks ago, right? So now that that's kind of moved on its own, it's just kind of following the general market indices, So if you're just trading pure technicals, then a good chunk, like maybe 80%-ish, 3/4, 80%, are just going to follow the general market. The stocks that don't follow the general market are going to be stocks that are in play, that have their own fresh news out, their own earnings out, their own PRs out, or it's going to be sectors that move in inverse to the markets, right? So those are the ways that you can detach stuff when you look at the market, and that's really important. So let's talk about, some of the trades for today. The big winner on today was Ulta. So Ulta was actually a little bit of a tricky play. And the reason is that, we took the short here. Let's see. Hold on one sec. 250.65, right? So 260.55. When you think about, like how to get into a trade, there's kind of a couple levels to really think about. So, we were having trouble. I was having trouble kind of reading Ulta at the open. And the reason was that because it's gapped down basically 100 points, the scale on your charts looks weird, right? Like the scale on your charts will look weird because when the gap is so big, it compresses, it compresses the scale because like we're trading in this $10 area, but there's like $100 on top. And so one thing I want to do, like when I see that, is like I want to trade it on multiple time frames and look at it at different angles. So with the ORB pattern, the rules of ORB is what? I need 3 sideways candles to enter the trade, okay? Minimum 3, it could be 5, it could be 10, but I need minimum 3 candles. So on this Ulta, you had first candle, second candle, third candle, right? And I was looking at that 250 spot to kind of get short this. And I always want to be a little bit early. And the reason I want to be a little bit early is that the SSR is on. The SSR is short sale restriction, right? So when you have a short sale restriction, what we need to be doing is getting into the play before. Because once the stock starts to flush, it gets really hard to get your fill because you're trying to chase it down and it keeps going down more and more. Then you chase it down, it keeps going down more and more, and you end up getting a bad fill. So I want to be in before the breakdown. The second part of this that I'm looking at, I know I need 3 sideways candles, but because the scale was really messed up, I also put in the pre-market data. And I don't always keep the pre-market data on, but when the scale is hard to read, I like to use the pre-market data to help me time my entries because I can start to see how it's just elongated, right? Because like you don't have that gap, so you don't have all that compression in the data. So now what's happening is like this is the open, right? So like the shaded area is the pre-market, the non-shaded area is before, right? So like you can see like this thing right off the bat starts to break under the EMAs. And so now I'm already interested in it. And I'm really eyeballing like this previous low, you know, right from pre-market, because that's going to give me like basically a trigger, okay? That's going to give me a trigger because I know like if I can break below that, then I've got a kind of like 1 test, 2 tests, 3 tests, and I got my EMAs on top, right? So when we're trading, like when we're doing flag breakouts or whatever, we're looking for curls for the girls and right, our EMAs to be on top of it. Well, if you add in the pre-market data, then you'll just have that. So as soon as this thing breaks under this level, I'm in this thing with a stop above, right? It actually took about 5 minutes to start working. Like it spiked down to 249, but not enough for me to cover, right? Like it spiked down, but you know, you short a $250 stock, you know, you can't really cover for $1, right? Like it's considering my stop loss is almost $2 away. It's like $1.50 away. So I need more range. So as this thing starts to kind of coagulate, marinate, then it starts to stay and break under this. And now we've got the flush. And I know the pre-market low here is 248. So I want to watch this area because if it starts to hold, then I got to cover. Does that make sense? So I don't use targets in day trading. When you use targets, you sometimes like miss out on the much bigger play. I'm a firm believer that in day trading, you have to have trades that you take like big chunks out of every single week. You got to have trades that you take chunks out of. What I mean by that is it doesn't matter if you trade small caps, large caps, but chunks. Am I ripping 5 points, 10 points on my Lotto shares? Like I need those chunks to really, really get going. So I'm watching it around here, but it doesn't necessarily mean that I'm going to cover. And I'm watching on multiple kind of time frames, on a smaller term time frame that I usually keep over here while we're trading on screen share, right? So like I'm watching it. If I start to get like green candles to hold, or if it starts to break over its EMAs, then I'm going to just kind of get out and take my profits. But as this thing starts to flush, now I'm in the zone. So like as this thing breaks down to 245, now I cover half. The reason I cover half at 245 is just nothing scientific. You know, at that point, like I risked 1.5 to 2 points, and now I'm up 5 points and some change, right? So it's a good RR right there that like pays me for my risk and also for my time. So I want to cover some down. The other part is just using common sense. When something gets extended at the open, especially, they can often come back and retrace, right? Like we saw over here. See how like it gets extended? It'll just retrace $6 in 4 minutes. So I want to be real mindful of that. The opening range is about covering the opening range. And so that becomes really important to do. So I want to cover off half into this, and then it's still trending down, right? So like what I want to be doing is like I still want to keep looking for, you know, a spot to take off the rest of it. So what I'm going to do is like as this thing, it tapped 241, and then see how like it popped up to 243, and then it tried to break down here, but it couldn't, right? So when it tried to break down here and it couldn't, that's like my telltale sign to say, you know what, like this is going to be a trade that, you know, could reverse now, because, you know, we haven't had like it tried to pop, it tried to re-break down and it couldn't. So as I get this green candle holding here, I just cover out the rest of it, 241.70s. So that's like what I mean by chunks. You know, in the last half, I took 10 points. So it doesn't really matter. Like if you're trading just 50 shares of it, 10 points on, right? Your last half is pretty good. If you have 100 or 200, however you're sizing them, they end up being good trades. You know, sometimes we just always think like, you know, that if I have a small amount of shares, I can't do anything with it, but you can. Now, the mistake on this one, I would say that I did was later on, like it popped right back into the VWAP essentially. Remember, you know, it squeezed from 241 right into 248. I need to get short this because that's also a breakdown level. I need to get short this again because like best trades, like if I look statistically at my best trades I usually hit 2 or 3 times throughout the day. So it's like I take a chunk, then maybe I take another chunk or a smaller chunk because as the day goes on, you don't get as much range. And then, you know, I hit it again later in the day for the flush or something like that. So my big mistake on this was definitely like not re-hitting it, right? Like I get re-hit, you get re-hit, and that was, that was a mistake. Now I took a second trade on this, and this was just goofy because I messed this trade up. As this thing was curling down, I went in for the triple tap breakdown, but like where I got to be real mindful of this, so I got like 241, and I just covered for like near scratch. But when you short something, you have to remember like where it came from. So like it came from 245, so it's going to be a little bit extended coming into the breakdown, and so it's not a good spot to really get short. I kind of chased it down. So as it broke down to 240, which I was up a buck on it, when it broke back over the breakdown spot, I just ended up getting out for like minus 50 cents or whatever. The reason I was so tight on it, and then it kind of came back down, but that's okay. The reason I had to be tight on it was that my entry was off. Sometimes once you're in a trade and you have a stop loss and you realize your entry is off, like you just got to tighten it up, right? It may work out, but the best thing to do is just tighten it up. That way, you're not really risking much. So, you can get out with like, minus $100 or $200 and really kind of take a small loss on that last half. So that ended up being kind of I would say that was a good, it was a good first trade, and the second trade wasn't like necessarily a good trade, but I did a good job just getting out, right? Like sometimes we can get so stubborn or dogmatic about our trades, like you short it and then you know, man, this is not really the right spot. And then what happens is you get married to it, right? You're like, I got to hold it. If I get a little bit of this, or if I get a little profit, I'll do this. And it just doesn't end up working like that. And so we got to be just super careful when we dig into these. So just something to kind of be mindful of when we're doing these. Now, while this was happening, I took a trade, in AOBC, and I just bungled this trade up basically. Not bungle, but it just didn't work out. Like I took this thing on the ORV short on the 2-minute chart, and in hindsight now, like I got 605, but maybe it was just a little bit low considering it started here at at 670. As soon as it squeezed back over this VWAP, I just got out of this thing. I lost 10 cents on it. I realized it right away because when it see how it dipped under 6, got to 595. When it ripped back over 6, then I know all right, this thing is probably going to squeeze. So I just tighten up on it and get out. So I lost 10 cents on it. I'd probably take that trade again, but it's not an ideal one, in hindsight. It wasn't as clean as, some of the other ones that, we usually take. I like the location though, because my thinking was okay, it's breaking under, this is kind of like the triple tap. So I should have maybe even gotten it a little bit lower. But what I forgot to realize was this was the 2 tap right here. And so it broke under, and I'm like, okay, it's okay. But then when it breaks back over, the trade is essentially over, right? And then I had a big squeeze, and it's been chilling out since then. ENPH, this was a good trade. I'm still in a partial on this bad boy. This thing, hold on, let me get rid of this pre-market data here. So first of all, we shredded this thing yesterday, right? We had this big kind of just nasty dump on this thing. So we had a big nasty dump on this thing, and we had it short yesterday, right? So yesterday we kind of shorted into this bounce into the 9 EMA. I caught a little bit like a buck and some change. So today, when you have a big dump like that, what you really want to do is if it opens green, you got to look to get short again for the green to red, right? So you got yourself a nice push, and then it starts to roll over, right? So I should have probably taken some around here. It wasn't on my radar just yet, but as it started to break down, right, and now you're starting to break down these lows, that's when I'm taking this thing short. So I got this thing near 30, 40. So I was maybe about 10 cents, 5 cents late. I could have been about 5 cents earlier. When you're trading and you see a good setup though, don't worry about the 5 cents here, the 5 cents there, because you're trading a stock that has range in dollars, right? So for example, like a $30 stock like this, I'd probably want to short somewhere between 1,000 to 1,500 shares. And because it's liquid too, right? And this one is not too wild where you're going to get shaken out of it. You know, like on small cap stocks, I trade much smaller shares. If it's like a $4 or $5 stock, I'm usually like 1,000 shares max, because you're just like, you get shaken out 20 cents all the time. In small cap trading, you got to really scale into your plays. You know, it's like add, sell, add, sell, short, add. You know, most of the time when you're trading small caps, you end up with like 100 executions. So I never add more than 1,000 shares on any particular add on small cap stock. A larger cap stock, you can add more shares because they're going to move cleaner. They're going to respect your MAs and stuff a little bit better. And I just, frankly, I feel more comfortable with size when I can use like a proper stop loss and stuff like that. So don't worry about like the 5 cents here or there. But like as this thing starts to break down, okay, I'm short. I'm just using my 9 EMA as a stop. But mentally, like I'm really thinking like if it doesn't hold this range right here, I'll get out at 30.65. So in general, I have like kind of two things. I use like an oh shit stop. That's like your hard stop if the market just reverses, or if the Trumpster farts, right, and the market tanks. You got to have like an oh shit stop. But I'm using a mental stop to really handle it. You know, I had the oh shit stop in case something just gets wild, but I'm using a mental stop of what I ideally would need it at. So because there's always like little wicks and shakeouts also. So this thing started to get down to 30. Now 30 is like some big support from the previous day, right? So as you got like this big support, that's going to be like a spot that it may hold. So I want to watch this around here. But what I'm going to do is I'm thinking in my head, like if it just makes a lower high, then it's definitely going to break down. Like then that's actually even an add spot. So it pops down here to 30, makes a lower high right into your EMAs, which is good. And then it starts to coagulate, and see how it likes to break down. See how your 9 EMA is like right on top of that? So that's like a really good sign, right? That's going to limit your risk. So now like my oh shit stop and my mental stop are getting lowered. Like my mental stop is going to right above this 9 EMA. And so now I'm kind of locking in at least like 40 cents in potential profit. And then it's boom, you get this candle in, and I always like to cover some into the flush. I take some off at, you know, 29.54. So I take a dollar and some change out of it. And then it gets like a little bit candle, you know, goes sideways for a couple candles, flushes again. And then I covered another quarter into this. Now I'm in like a 1/4 shares for Lotto, and we'll kind of see what happens. So, you know, these are like good setups. You know, the big part of just sometimes trading is waiting for the good ones, and also being okay to take a small loss here or there, like, you know, you would on an AOBC or something, where, you know, you have a shot, but if it works, it works. If it doesn't, it doesn't, right? You just take the small loss and you know, you get out of it. You know, the same thing with my second trade at Ulta. You know, you get out for minus 70 cents on a stock that you just ripped for 10 points before. That's totally okay, right? You're not going to really bat like high percentage winners in trading because you're scaling in and out of stuff and taking multiple trades. You know, if you can keep it at 50, 60%, and then you take big chunks, you're taking big chunks on your winners, like ENPH at, you know, covering some at, you know, 28.75. I mean, on those last, right, on that quarter shares, like I'm up, right, $1.50, $1.75. That's good. Like those are chunks, right? I need to take chunks. I was just talking to Jason about that the other day. You know, you gotta take, you know, his entries are usually really good. He's just got to work on taking chunks, you know, as they come in, because a lot of times, like especially a newer trader, they're really good at entries. Like, you know, we in boot camp class, right? So we just finished our last boot camp. We start the next one in a couple weeks. In boot camp class, like when you go through all the setups and everything, you're going to be really good at entries. You're going to be really good at entries because we spend so many days on patterns, right? It's like we got like 8 days of day trading, 8 days of swing trading, so on and so forth. You're going to be really good at patterns and getting in at the right entry. The part that takes a little bit of time and just being really like present when you're in the trade is understanding the range of a stock and where the EMAs are and letting it kind of just develop into what they need to develop on. And I think that's, you know, really important. And that's something that no matter how many classes we have, you know, and how many webinars we'll do, that's something that comes with time. You know, you can have some rules and stuff like that for when you want to cover and take chunks, but it also just comes with the screen time and the inherent understanding of stocks range, right? The inherent understanding of stocks range. You know, we have to always know, like, okay, this stock had a range the previous day of 34 to 30, right? So like I know, like, okay, previous day moved like $4, so I better not cover for like 25 cents, because if I'm going to take, like, if it's going to have a $4 range today, then I'm over here, then I know I should be able to get $2, maybe even a little bit more, because I'm not at the top of the range, right? So I know I should at least be able to get kind of $2 out of this thing, and that's a chunk, right? You have 1,000 shares or 500 shares, and you could take 2 points on something or 1.5 points. That's being a pretty good deal, right? That makes your day. That makes your day, and that's something we've got to always be mindful of. So when you guys are doing your homework and stuff like that too, like always kind of pay attention to range on stocks. You know, like a lot of times, say like with Roku and stuff like that, things that we daily trade, you know, sometimes they spike up, right? And you're like, oh my gosh, it's, you know, doing XYZ pattern, and then they die out. A lot of the times they die out is because they've used up its daily ATR, which is just like what average true range, or what we would just refer to as range. So kind of just keep some of those things in mind. And of course, like as you guys are, you know, kind of going through class and stuff like that, do you just DM me in Discord any questions you have, or, you know, you can always just, I mean, you guys all got my cell, but you can always hit me up 517-974-1480. And dude, let's shred for the rest of the day. Let's go find some heaters. All right, let's go do what we do. It's Friday. It's showtime.